Hi traders, welcome to part 2 out of 5 in our video series over here on the 80% OE case study, a strategy construction practical. So today's video, part 2, we're going to be looking at step 2, testing the different variations. We're going to be talking about this and more in this live trading session video. Hi traders, thank you for joining the Master the Markets team in our live trading session video today and supporting us in our mission to spread the truth of trading and help you achieve consistent trading performance. It is Tirun Arpan here, founder of Master the Markets Illustrates Conference in the Traders Open Day. So here we are traders in terms of looking at the different variations. Now remember that in the last video. Now let me just show you where all the streams are kept so that some of you may be wondering, what are we actually talking about over here? So let me just show you in terms of our profile. So let me just bring that up. Can we do that? Let me just see. There we go. Opening a new tab. This is our profile over here. Master the Markets 2010. We've been going on since 2010. It's been a very long time. So you can go under streams. Okay, so if you have missed the first part, you can go under streams where we talked about strategy rules. Okay, now coming back onto here, once you have created the strategy rules, I'll quickly just touch on it before we go on to today. We go on to step 2, which is the testing the different variations. So before you do anything, you need to establish a constant. That's what you need to do. Develop your constant first. And then from there, you can develop different variations. But before I go on to that, let me just explain this a bit more further. You see, in any research that we do, and also, just a quick recap about my background, I actually started off as a very different profession. I was actually a cardiovascular pharmacologist, okay? So I did 4 years of that, got my degree, then I did a PhD, then I left that, then I got into finance. But over there, when I learned the research techniques over there, in any kind of research, we establish a constant. Once we establish a constant, then we then introduce different variables to see how the variables improve from the constant parameters or basically make it worse, right? So that's how research is usually done, whether it's in the scientific world or the same in the financial world. Okay, the principles always are the same, just the specifics will change. So in terms of that, traders, as you know, let me go back onto these screens again. So here, last time, okay, in the last video, which I just mentioned here on our channel, Master Markets 2010, in this video, if you haven't watched, I went through all the different 5 components, right, of the strategy rules. And that actually follows on from our previous video series, which is on strategy construction. So I highly recommend you guys to go and watch that. So it goes actually in 3 types of video series that we're doing. I highly recommend every trader to watch. The first one is consistent trading performance. The next one is then the strategy construction, and now the strategy construction practical, which is the 80% OE strategy. Based on that, so let me just show you. Yes, the last week, what we did was just choose the phase 1 moves according to our smart money framework, which is this one here. Let's say it's a downtrend over here. Phase 1, you enter on the close of the bar, stop loss for the swing high, and all I'm doing is I'm taking a 0.2 ATR or 25 pips for currencies, whichever is bigger. Okay, so that's all I'm doing, and I'll exit either when my initial stop loss is hit. I'll show you this in a minute, right? Or my there'll be no trailing stop loss in here. Either my target is hit or I get an opposite confirmation bar. If you're enjoying this video, go ahead and smash that like icon. If you haven't joined our channel yet, click on the subscribe button and hit the bell icon so that you get notifications immediately when we post up quality content like this, and especially to get our live trading updates
sent directly to your phone.
Let me just do a quick recap on this so that you guys get an idea of what we are actually doing here. So if I were to use the replay mode, and then I'll show you in real time what's actually happening. So for example, yesterday we had this one here, right? Over here. But before I come on to that and show you if that was a winning trade or not, let me just go through the fundamental points. So over here, if I were to look at this over here, it's a viable trade in a downtrend, is it not, traders? Yeah. So always define your trend, define your phase using the framework that we got from the Smart Money Framework indicator with the blue arrows and the orange arrows. We can see that if I connect all the arrows, that's a downtrend here. And at this point, it did confirm its top, which we saw just now. So what will we do over here when we know that that dot is a phase 1 move, which I explained in the previous video under streams. If you guys missed that, please go and watch it under here, right? Under here, part 1 streams, yeah? Under our Master the Markets 2010 channel. Go and watch that if you missed it. But just as a recap, what I've done over there is, if I were to put the blue line here, so I would enter on the close of the bar, right? And then to be exact, what would that be? So that's 12585. So 12585. Just bear with me if you guys have already seen this before, just to bring up to speed the others, just on a quick glance and a recap for you guys as well. 1.2585. Now let me just use the stop loss as the red line. So the blue line is our entry. I'll put all of that together in a minute. So over here, traders, so then I put that as a red line here. So that's my initial stop loss. So that's going for the high 12746, right? 1.2748 with spreads and leeway. And then our target is going to be 25 pips from here. So 2585 minus 25 pips, that would be 2560. This on currencies. Remember, these principles you can apply in any instrument. So 2560, you can do it on commodities, currencies, indexes if you want as well. We do it on all in our live trading room. So over here, you can see that 2560, isn't it, what I'm looking at? So it's a very tiny target, okay? So 2560, just to show you what we're doing. This is in relation to our constant that we are looking at. So 2560, 2585, and then my stop loss is also locked in. Okay, if I want to use ATR, I can do that too. So over here, you can read that's the 100. ATR is 100. 0.2 of that is 20. So 20 pips or 25, whichever is bigger. We know that 25 is bigger, so it's more bigger than 0.2 ATR. So that's what I've chosen this. So that's a quick recap on the entry, ISL, and the target. Okay. Now, then once you then play, let's see whether this one hits the target or not. Let's see how that plays on to be. The first bar itself doesn't, right? There's no trading stop loss, right? So either it hits the initial stop loss, target, or I get an opposite blue dot which confirms this bottom. Then I will exit on the close of the opposite confirmation bar, which is what I've talked about before. So then I keep playing this. Let's see what happens. And the next bar then hits it. I get my 25 pip target. And at that point, I can just note it down here as 25 pips. Now, this is a recap of the rules of the constant, which we went through before. So now I'll come out of replay mode. And this is all on only phase 1 moves. Okay, phase 1 moves. But we can also do it on phase 2 as well. In fact, when we did the testing, I'm going to show you, we took all moves, right? Phase 1 and phase 2 and a few more as well, except with a few exceptions. So we build the constant. This is what we call the constant, okay? After you build the constant, now, based on the constant, you can see that, a few issues with it, right? So some of you might say, hey, Tiru, that's all good and nice to see, but oh man, one thing is, target is a bit small, and look at how much it went against me. I mean, what if it just went all the way straight up, hit my stop loss, and I'm losing quite a lot for a small amount of profit? Why would you do that? Now, if you watched our previous videos, it's based on our stats table here. I'm only doing this because to create one strategy, this is only strategy one, and this is not the strategy that will be trading end all be all, but it's a very high reliability strategy. 85% of the time it will win because it gets to 25 pips. You see, what we are interested in, traders, is the actual reward to risk, isn't it? Actual reward to risk ratio, not this expected. Why do I place the stop loss that far away? Because to give it room to move towards my target. Okay, that is what we explained in much in detail on our channel Master the Markets 2010, which you can follow us on this video series, 7 steps to consistent trading performance. Okay, that is where we explain that. Now,
For those of you who are unsure of any of the terminology or the concepts in this video, watch our free Trader Starter Pack 5-day video course as shown in Empire Cinema. It is educational, entertaining, and covers basics and advanced content with cross-transferable principles for trading and investments. It pertains to both beginners and intermediate traders, all dedicated towards helping you achieve consistent performance. Go ahead and register for it on the link below.
now once you got the constant, which is what we got on the spreadsheet over here. Let me just show you that spreadsheet here, which is strategy number 1, right? Now let me just move that here. Strategy number 1 close is exactly what you saw. MS3 none 25 pips. Okay, so we had 258 move to 25 pips. So the total gross profit will be 258 times 25. Rest of the 38 are as follows. Then I calculate my total gross loss. When I analyze all of that, my TGP and TGL is as such over a 10-year period. 6450, total loss 4333, and then net profit and loss 2117. Okay, so that's what we are getting over there in our constant, right? This is our constant. Now, you may then ask yourself, all right, Tiru, but how do I reduce this drawdown, right? How do I reduce this drawdown? 4333 to get here, because when I get that along the way, that might shake my confidence, is it not? As traders, the thing that shakes us the most confidence is the drawdown, isn't it? So how do I minimize this? Now that is where a lot of research and time goes in, especially in big hedge funds where they invest a lot of money and research and development. So in terms of this, if you take a look over here, if I want to do the quick recap on this one here, this is the kind of scenario that you want to avoid, right? So for example here, where you enter on here, but it doesn't get your 25 pips and then comes straight off, and then you lose back how much? So let's take a look at this one here. You lose back about 132 pips. It eats up about 4 of your winners, right? So how do you reduce that? Even if you can get to the same destination point, but how do you reduce the peak to valley drawdown? That's the question. So to do that, then you create different variations. Okay, you create different variations. The whole purpose of the different variations is, as opposed to the constant, is to reduce, as I said, your peak to valley drawdown, right? Is to reduce this point here. Yeah. Then to help you reduce the drawdown, that's the purpose, a mentor will be highly, highly useful at this point. Okay, the thing that you got to research on your mentor is, do they have the capacity and capability to help you, and have they already been there before? Okay, so over here you can see over here that in terms of the different variations, you see then what we then do on the spreadsheet here, we attach the different variations, strategy 3, 4, 5, 6. Now to come up with the different variations is what you need experience, and that's why you would need a mentor. That's what we do over here at Master the Markets, because we follow a 3-step methodology before we share anything on the public forum, which is research it first, then trade it and see whether it works in real time, then only we share it on our educational platform, which is Master the Markets. So over here, traders, as you can see over here, now, that is why we get invited to come and speak on different platforms like the Society of Technical Analysis. Some of you might know already that as well, right? So over here, just recently we went there. It says, thanks to us for coming and presenting on this kind of a systematic methodological framework that we propose. And over here, Gavin Holmes was there, Jeff was there as well from Trade Guider, and Jeff is the event organizer for STA, Society of Technical Analysis. So really good. I mean, that's how we get invited to all these prestigious organizations. We also in the London Traders Show, Investor Show, and all of that. So many. Now, after you've tested the different variations, now very important thing I must do mention is when you test the different variations, you must not see the data. Okay, from before. If you see the data before you come up with the rules for a different variation, then you will be curve fitting. So you'll be curve fitting, right? So this is what we call, if you don't want the curve fit, you shouldn't see the data from before to create your rules. So this is what we call the walk forward principle. So you walk forward without seeing the data and seeing if your variation will help you improve your results. So that is a fair test to do. Okay. That will also ensure reproducibility as well. Okay. So that's what you got to do. So then, based on the walk forward principle, then you come up with your different variations and test it throughout, which is what we have done on this spreadsheet over here, strategy 2, 3, and 4, and different variations, comparing it to the constant. And what's the purpose of all of this? To reduce your drawdown. Okay. So that's what we are doing. After you have done that, then what we then do is we collate it into a summary table. We collate it into a summary table. Now, let me see if I can pull that file up for you guys, and then I will bring this up. Let me see if I can pull that up very quickly for you. I think I should have it over here. Yeah, let's see if this comes up. That'll be good if that comes up. Let's see. So here, so that one there. So you can see this one here. So this is how the summary table will look like for all our different variations over a 10-year period that we have tested. Okay, then you analyze it from there. This is what we call collation of all your data and summarize it. And the purpose of all of this is not just to look at the net profit. Most people do that. They just look at the net profit straight away, right? That's not the point. You have to analyze all the other stats as well. And mainly, we are really looking at the drawdown and the expectancy factor, or the actual reward to risk reward factor as well. Okay, the profit factor. So that is what we're going to be going through much more in detail in the next video, and we're going to infer that. All I'm showing you all of this is a true case study of a strategy that we have implemented in real time and how we monitor it and manage it as well in real time. Okay. So you can see this continuously occurs over here. This is on dollar Swiss. And that's how we are taking all these profits and establishing in real time. You see, that's a confirmation bar, phase one move over here, and then we're taking it towards 25 pips and that hit it. Remember, this is just strategy one. In fact, on Brent oil also, we had another trade as of yesterday, which was also a phase one as well, which you can see over here, right? And zero point 0.2 ATR of that would be about 56 cents, which it nicely hit by the tail of that green bar before it reversed. So it hit our target before we would have seen that green bar go against us. So these are some things I want you to think about, but in the next video, We'll be talking about how to review those stats and infer from them. And then we'll be talking about how we then apply it in real time and what you're supposed to be looking at. So that is what we're going to be covering in all these upcoming videos on this 5-part video series on strategy construction practical, a true case study. Okay, right. I guess that's pretty much what I wanted to say for today. If there are no other questions coming in, I did have a few. One of the questions is I think I've answered them already, which is, in terms of drawdowns, it looks like a small reward to risk ratio. As I said already, this one, remember, you don't look at the expected reward to risk ratio as I mentioned over here. This is what we call expected, right? That is, don't get disillusioned by that. That is what a lot of online material will tell you to do. This is just the room that it requires. You need to give it before it gets to your target. So you need to know that number. This, you're just giving it room. That won't become your realized loss. Okay, you need to test it properly as well. Right, that's the main questions I think that's coming. If there is no other questions, traders, I think then we will conclude at this point. I think this was really good. And if you come up with any other questions later on, you can always post it to us and we can answer that. The last thing that comes to my mind really is our channel. You can follow us, MasterTheMarkets 2010, and also highly recommend you guys, if you want to know more about our kind of way of teaching and systematic approach, watch the streams. Also get into our newsletters as well through our 5-day video course that I highly recommend you guys to watch, which is on this link over here. And when you look at that link over there, then it will basically go to this 5-day video course, and you can then join our newsletter, name, email, number if you want for live trading updates, and you will get the 5-day video course. The 5-day video course actually looks like this. So it's a 5-part video course over here like that. It's totally free, high quality content, over 15 years of research, as you see how we express it and show it, and over our 40 years of cumulative team experience. So then the first half of it, usually it's done in quite entertaining way as well, and educational, and it's in a cafe and all that. First part is beginner stuff, and then we go on to the advanced stuff over here, as you can see over here. Okay, so over here, let me just show you. Then the advanced stuff will begin over here, as you can see. um, Over here, there you go. So that's the advanced module start. So the first half is beginner stuff, and then the other part is the advanced stuff over there. So you can watch that at your own time. That goes through the 5-part video format, and you can also see all our testimonials here. There's about 150 testimonials we've been going on since 2010, and you can get all of that when you register for the 5-day video course, and you will get also our news updates and all that, and all the other things that we are doing as well. Okay, for really high, good quality material. All right, traders, I guess that's pretty much that from me. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.
If you want to get notified every time we put a video up, especially on our live trading update videos, hit the subscribe button and turn on the bell notifications icon. This will get the YouTube algos to kick in and for you to join us in our mission to spread the truth of trading further, so that traders like you can benefit from our videos to trade like a master, achieve consistent performance, and change lives.